right, well, hello everybody and welcome to another Pepperstone live event talking about everything from support resistance today to, of course, what's going on with the volatility ahead of some of the most important news. It's just been heating up in 2025, up, down, and all around. So today, of course, we'll be covering stocks, commodities, and cryptos as we break down some of the simple steps that you can use to better understand markets. As always, my name's Thomas Atkinson. I'm joined by Tyron Abella. Tyron, it's been up, down, and all around for 2025, and it probably isn't about to stop just yet, is it?
No, I wouldn't have thought so. Welcome everyone. Yeah, look, I reckon that look, we called this pretty late last year really that we're going to have a very roller coaster 2025, and from a trading standpoint, I don't think that's too much of an issue really. And I think the technicals are holding up. If nothing else, the volatility surely is playing havoc with the markets, but the technicals and levels are holding up, and I think we're talking about support and resistance tonight at key levels, and they've been pretty good to bank on recently. So we'll certainly be touching on a few of those.
Well, let's begin, I guess, the show with some questions about or some answers to many common questions, which is where do we put support resistance? How do we do it a little bit better? And of course, what levels really do matter? And why do we pay attention to them? As always, guys, if you have questions throughout, please feel free to ask them, put them in the comments, and we will answer those ones. So let's begin, I guess, the show today by talking about the S&P 500. Now, the reason we're going to do that is because not only is it a very popular index, but at the same time, we also are seeing a really large kind of resistance period, and we're seeing a very large support area. And these are, of course, important zones. So in the S&P 500, often every 100 points or 50 points is quite important. And a lot of that comes back to psychology, but it also comes back to the options market. Remember, what the support resistance is really showing you guys is it's showing you where the market is finding a buying pressure or selling pressure. And in essence, there is something going on around these levels. And what you may have noticed recently is that 6,100 is a pretty clear resistance level. Multiple rejections off the 6,100 zone. 1, 2, 3, 4. Now, these are the kind of things that really help us as technical analysis traders, and they help us in psychology because we can probably guess that if it's touched it 4 times, if we do get a considerable breakthrough 6,100, that's probably going to mean something, isn't it, Ty, for us as traders and
Yeah.
investors? So a great thing is if you've touched the zone many times, if it's a 100-point increment on something like this, or a $10 point increment, or a 100 pip increment if you're trading currencies, generally they will mean more because it means that when something is broken through, it's probably incredibly significant. So how important is this 6,100 level for the S&P right now, Ty, in your opinion?
Yeah, look, we call it the round number phenomenon. It happens in currencies as well. And it's a key level, obviously. Look, it's an all-time high. We know that that's well documented now. But I think it's really, really important on both sides, actually, because if we do fail to break this level and probably break it soon, it could mean that there's going to be a fairly heavy resistance point, potentially for all of 2025. Because if we get a bit of a sell-off from here, look, how many reasons has it had to go past it? We've had good earnings overall. The market's been yes, it's been volatile, but volatile in a good way, really. A lot of what President Trump is doing is really good for the S&P 500. So a lot of the good news is out. It's not being stuck here because we don't really know where the world is going. I think for the US markets, I think the world is going in a pretty good place. So it would want to be breaking through soon. Is probably my point. And I think if it doesn't and it sells off from here, and when I say sell off, I'm not talking about 20 points. I'm talking about rolling over properly and getting back below, say, a 58.50 or something like that. Then I think it's actually significant because it may well be the high of the year. So that's going to be the important part. Looking at the charts, I think it's more than likely to break up. I think that that 6,100, if it does break, like Tom says, 6,200 is going to be the next target because really markets gravitate to these round numbers, and that will also equal the last swing, which is around about 100 points as well. So I think it's at a level where we have to pay attention. There's no question about that. Options, do become very, very important. I hate to think how many, calls have been sold. That's 6,100, Tom. And it may well be the stopper at the moment. It's actually stopping it from going up. And when these calls eventually expire, it might be the move that actually takes it above and continue on. So realistically, I think that it's extraordinarily important zone. One of the most important zones probably in the recent history, probably in the last couple of years, I would say.
Yeah, so we've got three levels. We've got the 6100, we've got the 5900, or sorry, 6000, and we've got the 5900. All three of these are very important. Break below here will expose significant sell off and probably what we call a negative gamma event. 6000 has remained a very good intraday level for buyers, and you can see that when we start to dial into smaller time frames. You'll notice 6000 finding respect after breaking. So breaks 6000, comes back, retests. And this is something that you can use when it comes to support resistance. It's what we call role reversal. So if the market actually breaks 6100, let's say we go 6150, there's a decent chance that if it comes back to 6100, that previous resistance may act actually as support. So this is going to be one of those important levels. It's a simple step that you can use when it comes to trading and investing to consider in the future. It was a very important zone. So what's to say that once the momentum is broken through, we can say, okay, this has probably been accumulation. The market's ready to move to, let's say, 6,200. When it comes back to that level, it's probably going to see a reaction. And that's exactly what's happened here at the 6,000. So at the moment, we have a series of 6,000, 6,100, and 5,900. Pretty easy levels on the S&P 500, but all probably the most important levels when it comes to intraday trading, swing trading, understanding when you're stuck in a zone and when you're not. And you'll notice when you look at 5,900 that if that level is broken, there's really nothing stopping it to potentially the 5,700. So there are big moves coming, and this is all ahead of the inflation numbers, which often see the market do this type of sideways action leading in. Speaking of sideways, when you're looking at other markets, let's say the US dollar, for example, and we like to, when we're looking at support resistance, understand where you're at from a higher time frame. You may notice that the dollar index has been doing kind of nothing for a few weeks. We've talked about it probably finding overall weakness because of our euro US dollar analysis. But in most terms here, we have kind of like a coiling market. Now, this could be seen as distribution, which is generally a sell off in supply demand terms, or it could be an accumulation and the market could rally back up. The trend is obviously still technically bullish when you look at the higher timeframes. But there are certain levels that you're going to want to mark out. One of those being around the 106 level, psychological zone, and most importantly, Ty, what is this in terms of support and resistance?
It's a role reversal zone, and yeah, if it gets back down there, that could be the pickup point. I think we've done webinars for Pepperstone just on role reversal, and realistically,
Yep.
it changes the game for support and resistance, because support and resistance in its own right is extraordinarily powerful. There's no question about that. But when it's coupled with a role reversal zone where you're expecting a reaction after a breakthrough of a level, I just think it enhances the trade significantly. I think it really does help. And realistically, that's what you want to base your better term trades around, because you think about it for a second, and a pullback all the way to 106, although it might look dire for people who aren't doing a role reversal analysis, actually gives you a really good buying opportunity if we see consolidation down there and a bit of a change of trend on the smaller time frames. It's actually a golden opportunity to actually get in with the right movements on the smaller time frame. So really, as much as it might seem as doom and gloom for people who are looking at it from I guess, a more lower time frame standpoint, understanding where that role reversal is extraordinarily important, and really something that you will want to factor into your trading analysis for sure.
Yeah. So 106, just a key looking spot there. So what I thought we'd do today is obviously most of you guys are probably familiar with basics of support resistance. We obviously go through these many times, as Tyron said. It's on Pepperstone's YouTube channel. You can go back and have a look at some of our role reversal videos, some of our ones on support resistance. So I thought what we'd do is we'd actually do some live analysis here using support resistance as we go through each one of these pairs. So if you have a couple of pairs that you want analyzed and they're majors, we could be doing those. So make sure to put them in the chat. We'll cover those ones. But let's continue on here with this journey. So I guess we'll jump on over to Bitcoin and Ethereum here for a moment, because these are getting a lot of news. And the main thing is really, when we look at a chart like this, what levels should we really be focused in on? And the key for support resistance, or good support resistance, is going to be jumping up and down through the timeframes. So you're going to want to be looking at the monthly and understanding where the weeks have gone and what the structure looks like. You'll be wanting to look at the weekly as well. and understanding what's been going on here. And then you also want to be looking at the dailies. And what I guess you find is that we're clearly getting a heavy level of buying pressure that continues to come through a zone. So, one of the tips that I thought we'd use today is obviously with support resistance, you're usually looking at a static level. So, in support resistance, you're obviously just saying, okay, well, it's 83,500. That's the level I want to buy. I'm interested in that. What if we said, okay, this looks like pretty good support here at around 91,000. We also have seen support down at around, let's say, 88,000. What this then creates is an area of interest. And a lot of people would call that demand. That's what supply demand really is. It's kind of like support resistance, but a little bit different. And in general, these levels become points of interest for your trading technique, whether that be a first time frame change of trend, a lightning bolt style move like this, or whether that's something else where you're looking at a couple of moving averages, you're looking at anchored VWAP, you're looking at all these other types of indications. So what can we really delineate here from Bitcoin? Well, of course, we know that people have bought it a lot around 90K. Now, why is that important, Ty? Because it's a big round number, isn't it? So it makes
Absolutely,
sense
it's
that people are going to like
absolutely
that
it's a big
zone.
round number, and it's
Yeah.
also what that would form if that level was broken is a $15,000 head and shoulders or actually double top, sorry, which takes it all the way back to 75,000 of that pattern fulfilled. So it's an extraordinarily important level. There's no question about that because on a weekly time frame, you can see it on the daily, but on a weekly, it's a very clear head and keep saying head and shoulders double top, which is effectively something similar. But same principle applies where a top has not been broken and it's testing a neckline again. So it forms that 90 to 91,000 forms an extraordinary base because realistically, the level that it could fall to if that level gets broken is quite significant. There's nothing there in between to really catch it, is there, Tom? Like you could find ourselves back at 75,000 very, very as quickly as it got up there, actually. Very, very possible. So that's why it's such a significant level. Now, are we saying it's going to break? Well, we don't know that for sure. But what we do know for sure is that every time the market's touched it, it's reacted very, very aggressively off that base and pushed up very, very quickly. So that's why it's so important. But if we do see a continued weakness and we're all of a sudden we're trading on a daily around 88 or 89,000, I think the rut might start to set in for a little while and we might see a significant sell-off. But there's still a lot of work to do for that to happen first. And all we can see now is the evidence that it's giving us that every touch of that level has been seen a lot of buying in that area. So it's all the information we need. But yes, absolutely, round number, support, a potential pattern, neckline, there's all sorts of things. But if you look at those boxes that Tom just drawn up, the reactions off this level have been very, very swift and very, very aggressive.
Yeah, and I think that's important to always note whenever you're looking at support resistance or any of these types of techniques, think and understand what goes in the reactions off your key levels. So let's say you analyzed and you said, look, I think 90,000 is a key level of support. I think it's demand zone. I think it could have action around that point. If you then see these strong quick rejections, that makes it so that it's a great reaction. So that generally means that there is strong buying here and that you would expect that every time. In fact, if you don't see a strong wick rejection down here, it probably tells you a big warning sign that the market would be heading lower. And as Ty says, if we do break these levels in the future, that's going to be something to worry about. So of course, you have that between 87 and 90 kind of $1,000 key level of support. But what about the resistance? Well, you can see here I marked out around 106,000. We did that off the previous high, and you'll notice that it broke through a little bit, but then continued to reject. So again, that same idea of the wicks rejecting. So what this does is, in essence, puts us into a range-bound market, what I call is a pit. So we pull back in time. And whenever you're in a pit, you really want to be starting to look for shorter take profits. So you might say, okay, I'm going to buy the bottom and take the profit. And it's a great tip at the midpoint. So oftentimes people will sell into the midpoint and people will buy into the midpoint. So you'll notice that there's actually a lot of transactions that tend to happen right through the middle of this particular chart. And what that does is it helps you kind of understand that if we are breaking this down, what is the, in essence, best area for us to take profit? And it's generally going to be in the midpoint because that is the most touched area And you'll be able to use another technique, which is something like a fixed range volume profile, to really see whether that has also been consistent. And what you'll notice here, guys, look at the most traded zone right in the midpoint. Now, why is that? Because this is in essence a pit or a pullback in time. So often the best thing is if you're selling the top, the middle of the range, if you're buying the bottom, the middle of the range, you'd be surprised you will usually get better take profit zones here. So really good whether you're on a 5-minute chart, 10-minute chart, 1-day chart, weekly chart, something to consider. And what you'll notice as well is if you're using this fixed range volume profile and we actually extrapolate or bring this one over. So let's say we grab this bit here, we pull this over into the middle of the range, you'll notice it already showed itself here. So it's not like we're just saying, oh, look at this revisionist history. It actually showed itself to be the middle range before any of this ranging actually happened. And that's why it's great to know your TA and be able to, not so much predict, but obviously come up with building of evidence. So when you look at Bitcoin, some great resistances and great supports, just like, funnily enough, the S&P 500, funnily enough, US dollar. So let's move over now to one of the markets that is totally not in a range bound, which is, of course, gold. And you can see here gold has continued to be incredibly strong over the last couple of weeks. And you might say, well, how do I do support resistance on this? Well, it's a bit tougher, isn't it? Because we just don't have that clear previous history of resistances and supports that have been formed. So we basically have a market that's in strong momentum. So I would argue that this is where probably you want to be using your momentum indicators and not so much use support resistance unless you're going to use smaller timeframes. And if you use smaller timeframes, then you can start to say, well, we could mark out, let's say, this as support. And if the market then comes back down to that level, what would we be at least expecting, Ty, to see around here?
Absolutely. That's a role reversal bounce. And I think on a daily, you can actually see that even more clearly. I mean, if we can leave that level there, it could probably pull back a little bit further on a daily, but really, the same principle as what we're talking about. Now, do we think that gold's going to go back all the way to 70 or 27.50 or 27.20? Probably not. But when you take that out a little bit, you'll see that there is definitely a zone there where it could pull back to that level, and there was resistance there for, well, at least 2 weeks, which is pretty significant. And if it comes back to there, that could be the role reversal. Sorry, I'm looking at it on a weekly chart. So I told you to go to daily. On a weekly, the 27.50 is a very, very strong zone. So if you go down to a weekly, this is why it's important to have a look. If you go look at the 27.50 level right there, that is a potential role reversal zone, because you can see that it touched it, pulled back off it, then eventually broke through. So if it comes back and retouches that zone on the weekly, well, not on the weekly chart, but if it comes there, you can see on the weekly chart that it is actually a role reversal level. Now, that I look at that and think to myself, if gold is trading anywhere around that sort of 27.50 again, I would be on high alert for a potential consolidation of that point and a rebound straight back up to probably where it is right now or further on. It might look like a doom and gloom, but really it's only the best part of $150 away. And the way gold's been moving at the moment, that's not really that big a deal. And really, probably that wouldn't be even a 50% fib of the move, or probably just on it maybe. I mean, that big move on the weekly, you can see started at about the 2450 to 2500. So you're talking about an overlap of support and resistance and a good fib number as well. So really, really good level for it. But again, it's one of those things where we're not predicting that, but we're prepared for that. If it does come there, we know that we're looking for something that could potentially give us a very good buy area. And that's the important thing to remember. So that's why it's always good to mark these levels. And it's probably another thing, Tom, that we don't talk about enough, but having a real understanding of the instruments that you're trading, not trading a million different instruments where you have to do your analysis all over again every time you look at it because you can't quite remember. If gold is in your arsenal, if it gets back to 27.50, you're on high alert. You don't have to have a look at a chart for that, or a very brief look is very significant. 106 on the dollar index, we're paying big attention. A break of 5,900 on the S&P 500, again, high alert. So we know those levels intimately because they're in our arsenal, if you like. If we're looking at too many things, they can get a little bit lost in the system, and you have to do all your analysis again. So I think that having a smaller stable, if you like, of indices or instruments, I should say, that you're trading gives you insight a lot quicker, doesn't it? Because you can actually the numbers, and they're easy to remember.
Yeah, and I think it's important to always to keep those in the back of your mind and set alerts for as well.
Mm.
So you want to be setting those alerts so that when it does happen, you're ready. Let's have a look at one of those actually right now, which is going to be silver, because this is a key level you want to be paying attention to. Two key levels. You'll notice we marked out 3130 as a potential here. It was a daily 20 moving average coupled with a level of support. And there was a little bit of a reaction over the last 24 hours. We'll look at that small time frame in a moment. You're also getting a potential consolidation here ahead of a key resistance. So this resistance, pretty clear to know that this was going to be a key level on the charts. But if we break that in the future, then that's going to open up significant upside potential as well. So, there are two levels that you want to be looking at in silver, where we just got to over the last 24 hours and a potential reaction there, which so far so good. And then, of course, a break of this upside potential here, which then could move the market from an equilibrium to an equilibrium. So these are the kind of key levels. Really, in between this area, the chop, that's when you probably want to be focusing on the mantra patience, react, and predict, because it's not as easy to predict that markets will do anything when they're in the middle of nowhere or at a key resistance, usually where you expect consolidation. And as a trader or an investor, it's very important that we don't get trapped in these zones. We don't get, wrecked by this 32-20 kind of area where it goes up, down, and all around. We're aware that the market is probably going to be resetting indicators, and support resistance can help you do that. So let's just have a quick look here at silver, because it has come off that level of demand. And for anyone that's in our private communities, you guys would know that we do talk about this quite a lot. We've been discussing silver recently along with gold because we've been quite bullish on them. And you'll notice that we're looking here for this 32 kind of probably 20 zone to really confirm that this market wants to break actually a new high. So at the moment, it was a strong reaction, but it's still making a series of lower highs and lower lows, isn't it, Ty, from this resistance over here. So the issue with that is that we haven't actually seen a sequence breaking up, at least on something like the 2 hour, from this small time frame. If we go down to
No.
maybe a 5 minute, maybe there we see a little bit of a higher high, which we do, but we just don't get it on those higher time frames. So for us, yes, it did bounce. Yes, we expected it. Yes, okay, maybe a minute trader could get into it. But from a higher perspective of 1 hour plus, you just don't have enough yet to say that silver is really wanting to go long. But when it does, it's likely it's going to break that resistance.
Yeah, that's right. And I think that, look, from a technical standpoint, I think silver's been pretty good to us, really. Like, it hit the level that we needed it to hit. But the smaller time frames are definitely indicating a weakness. And you're right, like, there hasn't been a sequence on a significant time frame to show us that it's going higher. And, the 2 hours clearly down there. So, realistically, you don't want to act on this one until it's actually proven itself. Probably silver more than any other commodity, I think, is probably the one that you really want to wait for the momentum to actually turn around and show you, because the way the contract sizes work, we all know that they can be a little bit tricky. So you want to be making sure that you've got the direction right on silver. It's probably one of the ones where you really want to make sure the momentum's in your favor before you trade it. Probably one of the tips. I'm gonna go for tip of the day, Tom.
Okay.
And never counter trend silver. You can get away with counter trending other instruments because you can get in and get out swiftly, but trading a counter trend on silver, like going against a trend on silver, can be very, very punishing because of the way the contracts work. So just be really careful. I would suggest not to do it, actually. Just always trade in the direction of the trend with silver to keep yourself safe.
Yeah, silver can be pretty brutal as well over weekends. It can gap up a little bit. All right, let's move over to one where support resistance was probably the biggest key, along with understanding weakness coming into it, and that's going to be Tesla. Now, Tesla's going to be in the news for all sorts of reasons at the moment, and of course, nothing has been positive for Tesla in the recent days. But could you have semi-predicted this before it occurred? I've been a little bit negative on Tesla due to valuations. And the just epic run it did go on post-election. But you'll notice here that we come in, and this is the real key here. We come into this support, which we know is a support because see here the two bounces before. And it comes in with a series of lower highs and lower lows on the smaller time frame. Now, when that happens, you want to be ultra careful about buying this. And of course, as soon as it went through, it did the classic little bullish weird hammer. It kind of makes you think it's bullish, doesn't break this high, doesn't change sequence, continues to be bearish. And when this candle came through, it was certainly mega short. And since then, of
Mm.
course, it's dropped itself. And guess what we're leading into? Next
Yeah,
levels of support. So is this an area that I'd be short Tesla? I'd probably be taking profit, frankly.
yeah, exactly.
So this is a
Mm.
take profit area, not necessarily a great short anymore. But the point is, what do
Mm.
you start looking for here? Potential bids. Have we seen any structure? No. So you don't want to be involved in getting into the wrong direction on something like
No.
this. You can trade
Yeah.
into the zone, but take it off.
And it gave us warning too. Look, Tesla gave us warnings that this potentially could happen because, look, at the end of the day, that's a pretty solid descending triangle. There's no question about that. Yeah, you've got the lower piece forming that triangle right there. It broke at the right place, 2/3 to 3/4 of the way in, came back and retested the base from the bottom. Yeah, it did all the things, hallmark trade actually for a descending triangle. And really the profit of that triangle would be around this area, which is proofing again. And we love double proofing of a pattern and a profit target, centered around another form of evidence, which the role reversal level certainly did. Could it have a little bit more to go? Yeah, potentially. But yeah, I think that pattern was the good thing about a descending triangle is it's almost a self-fulfilling prophecy in a way because it's giving you all the things that you'd be looking for anyway in a weakening market, and that is of course lower highs, and that's what it was doing. It gave us the lower highs, and it was finding a base, no question about that, at the bottom of the triangle. But even without the triangle drawn, you can see that we've seen weakness here, and the triangle really just confirmed it. But yeah, could it do a little bit more? I like the idea of maybe a little bit of buying around that sort of 320-ish area. But again, it wouldn't be
Throughout
something
today.
I'd have. I wouldn't be having an automatic buy it there. I'd be waiting for it to actually consolidate a little bit and proof that it may stop there because you know what, the next level is about 280. So
Mm. Yeah, no, it could easily go down. I think it further fill gaps, 50
mm,
even, because you've got gaps that have been left the election and all the results over there. Either way, very, very good knowledge of course, technical analysis, seeing a weakness, seeing the traps. The general sentiment was incredibly bullish. And now, of course, we've got news about FSD suddenly being offered free from motor companies like BYD, etc. And of course, that's really hurting what was seen as one of Tesla's competitive edges. All right, let's move over to another pair then, and we'll look at the US 2K. US 2K, very popular pair. Obviously, the Russell 2000 and the small caps in the US. Now, the reason I bring this up is it's pretty clear that we've got a key resistance, 23, kind of 25. If we break that out, well, we've got some aiming areas on the left-hand side. So, of course, that's a great resistance. Do we have a great support? Yeah, we've got a good level of support that seems to be around that kind of 2200 level. So, again, 2200 previously was support, acted kind of the same way again, and just, two really solid zones on the Russell 2000. I don't think there's much more to say about that, but post inflation today, we might see it go ballistic up. And if it
yeah.
breaks through 23.25, I would say that's a pretty strong sign. Ty, what do you?
Yeah. I think that if we get a break above that 23.20, I think there's more blue sky above it to its all-time high than there is on a Melbourne sunny day. I think there's really nothing stopping it moving very, very quickly if we get a break past that resistance. But hey, no question, that's a very, very heavy level of resistance at around that 23.20. So extraordinary. The bigger the resistance, the more important the break, like anything.
Yeah,
So yeah, that would be, especially when there's not much resistance in front of it, all the way up to about that 24.50. So yeah, definitely one to keep an eye on.
yeah, I think it needs to be paid attention to. All right, well, let's jump from that one over to another pretty requested stock, which is of course Nvidia. And this was a classic case of a great level of support that if you'd had it marked, you may have also been able to use some of the other techniques we talk about. One of those being volume profile. Now, Nvidia, of course, famously got smashed by the whole deep seek information. Only it seems like it was neon ago, but course, it was just a few weeks ago. and it got smashed down into what is getting considered the most traded zone and also a level of support. And what we actually saw here was we saw a mixture of decent activity because the volume went higher. We also saw large traders come in and they were buying, or at least it looked like they were buying large orders. Now, oftentimes when markets kind of stop the way they've done here, that can actually mark considerable bottoms. So we'll see. I mean, we've got earnings coming next week, which will be very important. But this was a case of what Tyrone said before: keep your levels ready, and when you've got them ready, I mean, you can even see here if you take this trend line out and extrapolate it, you're going to find significant touches coming through. But the main thing here is the key level of support. You had it ready, then you might have said, "Wow, this could be a really good buy zone." Wait for the smaller time frames, see some action. Potentially, you might have been a buyer at that area. Conversely to that, you may have also sold 150 several times because it's an incredibly strong resistance. So you can mark that one out. Well, very good.
I think the other key thing about NVIDIA is role reversal works both ways. And that's something to keep in mind, that what we're also seeing at this quite significant level is that there is a bit of, if we draw a horizontal line exactly where price is, we're going to see several touches of this level that were support previously. So just like our role reversal can help you on the upside, role reversal can also help you on the downside, because if we fail here, and it starts to sell off and we start to see a series of lower highs and lower lows, that's role reversal working in a downtrend. So where a level has been broken and it comes back and retests the support level from below, which then becomes resistance. So certainly it's a very, very important level. Actually, this is extraordinarily important, and I love that it came down and touched that most traded zone, Tom. I think that was a really good level. I think we drew that quite early, actually, as it was in the. It does seem like it seems like months ago that we saw that event, but it was actually only 2 weeks. So things have happened very, very quickly. But again, don't take it for granted that this is just going automatically up, because we've seen plenty of buying. It is at a level now where it needs to keep going, or it could find resistance here and potentially reverse. So certainly one to set an alert for, because if I see a series of lower highs and lower lows forming on a bigger time frame from here, I'd be aiming back down to that 116.
All right, well, let's move over to another one then and have a look at what we can do with support resistance and some basics there. I guess the next one that's pretty popular is always going to be the Euro US dollar. So let's have a look at the Euro US dollar. Then we might do the Aussie as well, because both of these currencies are quite important at the moment. And of course, we're seeing some pretty significant levels. So let's go out to the higher time frames. And what we'll notice is that we might have had some level of support between around 1022 and somewhere around 103. And that area has been kind of interacted with a lot in recent months. And of course, we have a couple of key resistances. We now have 104, kind of 98. We have the 105, 106 level. And then, of course, we've got the 108, 108, 50 kind of zone. So on the high time frames, you kind of see all of those levels are going to be pretty important. The low timeframes are going to show you that it really needs to hold here and it needs to make a series of higher highs. So far, I would say this is basing. At least that's what you're looking at. Volume is accelerating as well. So we've got high volumes, consistent volumes throughout this basing potential. And it's going to come back to really inflation numbers come out in next 24 hours. So inflation numbers could have big impact here on the US dollar and push it in one direction or not. And what did Tyus mention before? 106. So 106 on the US dollar. If that's broken below, you watch this euro go into a serious trend. And
it'll get back to it'll get to 106 as well. I think they'll hit 106 together, actually.
Yeah, I guess so. Yeah.
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 So and I think that's probably something to keep an eye on, because you got to remember the euro is effectively the inverse move of the dollar index, because so much of the dollar index is made up of the euro. So it's always a good way to do analysis on both. It certainly pays to do analysis on dollar index and the euro US dollar at the same time.
Now, this is a classic of pay attention to not only your support resistance levels, but also pay attention more to the price action than the news. So you may have heard that Australia potentially may get an interest rate cut. Now, we don't know if it's going to happen. I mean, the markets might say it's 92% likely or something like that, but we'll see what happens. markets are often wrong on interest rates. The key, though, is you may notice the market is bulling off this. And you might think, well, how's that possible? One second, we were looking at a cutting rate. Shouldn't that weaken our currency? Well, I think the market had already been weakening the currency quite a lot. So it's one of those sell the rumor, buy the fact style situations. But we did see a wipe of the low, key support getting reached, of course, which you can see over here. And if you were short, would have this been a great take profit zone? Well, of course, the answer is yes. And the trap that a lot of retail traders, a lot of us fall into is often we will not take profits here because we see it go a little bit further and we start getting greedy. This is an
Mm.
excellent take profit zone. And I would argue even this is a take profit zone.
Yeah.
So,
I
don't
think
get
both of
too
them were.
greedy when you
Yeah,
hit
both of them
levels.
were.
Yeah. Yeah.
Absolutely. You got. I think understanding where your levels are, and I think I know a lot of people get disgruntled when they take their trade a bit early and they think, oh man, I could have got so much more out of that trade. Never be disappointed if you've picked a good level and it gets there. If it keeps going, it keeps going. But yeah, being out of the market and looking for the next opportunity is far more important than hoping and praying that it keeps going. Don't worry about what you leave on the table. If you've had a solid take profit level hit and you've done your analysis well, you should be patting yourself on the back and not worrying about what has happened after that because the opportunities will come. It means that you're following rules because 9 times out of 10, good take profit levels are there for a reason. You've taken it there for a reason. So both of those levels that Tom talked about were really important. But I agree with Tom. I think that this is on the verge of a breakout. And if we do get a close, effectively above, I think I'd like to see it close probably above 63, sort of 20 on a daily. I think if it does that, I think it really opens itself up to a move back up to 65 cents pretty quickly, actually.
Yeah, 65 cents most likely the other area.
Mm.
Another thing, range volume profile, find that most traded zone, likely going to be around there. So, yeah, I would say likely that we will get some form of action up here if the Australian dollar is able to break above, because that's the next level of equilibrium. And again, that's where the resistance sits. And again, that's where supply sits. And you'll notice they start stacking on top of each other, which is really cool. So the Aussie US dollar looking better than it's done in a very long time. And again, another basing formation and potentially ahead of inflation figures. So a lot could be going on in the next 24 hours here. And I have to say, talk about it, patience, react, don't predict. The reason we say that is because this is all great and all, and it could break through that 63.20 and make a new high. But wouldn't it be better just to wait for the market to say, you know what, flow is activated, rather than to sit here and speculate it's going to happen and then it's down here the next day and you're sitting there with a sad face going, what do I do? End up holding a position, it can wreck your account. So we don't want to be doing that as much as we can. And that, I think, is probably one of the biggest undoings for most retail traders. Hands up if you've ever done that before in the chat. Have you ever made a decision where you thought something was going to happen? You were pretty sure of it. You did it. The price action didn't confirm it ultimately. And then you were left the next day or the next days kind of shaking almost because you were like, well, wait a second, what do I do now that I'm in this position in the wrong way? A few of you guys have been putting
Yeah.
up your comments.
I think
Michelle,
everybody, I think
Stuart,
everybody's done it. Everybody's done it.
Dan,
Yeah.
Mitchell. Yeah. Yeah. I feel safer trading 1 to 3 hours after the data release. Yeah, that's a
Yeah.
good way of doing it. Often the data release will push to get liquidity and then it will actually go the opposite way. And that's why I often say after non-farm payrolls, the best way of trading it actually is to see how it activates, see what it does, especially if it goes in the opposite direction to what you think is logical, and then it comes back after that. That's usually an excellent sign it's done a trap. So about 45 minutes to 1 hour after is actually one of the better trades. All right. Well, the last question coming in here, Ty, is what do we think about the Chinese markets right now? How are they going? Are they going well? Yeah, they're going pretty strong. So this is a case of, again, not so much support resistance, I would say, but it is a case of if it's in the press, it could be in the price. And what I mean by that is we had DeepSeek again just a couple of weeks ago, people were talking about that. And what that was is it was a bit of a catalyst to make people say, well, wait a second, do we now have some innovative potential companies here in China and are they too cheap? And really, it was an excuse to allow the markets to potentially go up against what we've been seeing, which is, of course, incredible negative sentiment. And maybe the negative sentiment is valid. Who knows? The real point here is that the trend is super bullish, The market has been making a series of higher highs and higher lows. And really, it doesn't matter what your opinion is. The reality is flows are moving in the positive direction. So this is just a classic case of follow what they're doing, not what they're saying. And I think that's probably going to be one of the big mottos of 2025 as we're pushed and pulled with all the media and news that we're hearing about, going to freak us out. But ultimately, you just want to follow that price action, follow those key resistance breaks, follow those key support breaks, and go with that. So I guess we'll end the show there for today, guys. We've got a lot of tough markets that are stuck in big zones. CPI may be the thing that brings them out, or Jerome Powell's speech, which happens 1.5 hours after that. And then, of course, we're going to be looking for potential big breakouts on the dollar as well very soon. Let's hope.
Brilliant. All right, thanks very much, everybody, for joining us tonight. We look forward to seeing you at the same time next week, where we'll see what the CPI numbers give us and see if we have any more insights as to where these big trends are going to start to move to.
All right. Thank you so much, guys. We'll see you later. Bye for now.